Hey folks, Chris Versace here. Happy Monday. This is the roadmap for the week ahead. As we kick off this week, we have to recognize that we are going to sunset halfway through it, or just about, the month of April and begin the second month of the current quarter, better known to you and I as the month of May. Now, despite the market's rebound last week, and by looking at the S&P 500 and the Nasdaq Composite, it was a hefty one. We have to remember that still the S&P 500 on a year-to-date basis finished last week down just over 6%, and the Nasdaq Composite down just about 10%, again, on a year-to-date basis. Now, as we close one month and start the next, you would think, wow, we're going to get that usual flood of economic data, and we will. It's going to be a busy week, but on top of it, you have to remember that we are in the thick of the March quarter earnings season, and of course, we have to continue to watch not just headlines, but tweets for the potential latest on tariffs and trade deals. So we have a busy week, and as you can imagine, given all that's going on, the pace of things, the velocity of things is only going to escalate as we move through the week. And yes, Thursday and Friday will be important days for the markets for a couple of reasons. But let's talk about the things that we'll be watching this week, and then we'll get to that in a minute. On the earnings front, as I just mentioned, we are in the thick of the March quarter earnings season, and this week alone, we have about 180 S&P 500 constituents reporting. That's, round numbers, about 36% or so of that index. And by the end of this week, just under 75% of that overall basket will have reported. So if you think about that, this week is a very big week on the earnings front. When we come out of it, to some extent, we'll have a much better sense about June quarter guidance and what EPS expectations are for the back half of 2025. But there's another reason why it's a big week for earnings, and it comes down to four companies: Apple, Amazon, Microsoft, and Meta. Those four stocks are all reporting this week, and they comprise just over 19% of the basket that is the S&P 500. Now, when they report, of course, folks will be really curious about their results for the March quarter, but their June quarter guidance as well. And I think it's going to be fair to say that the market will be closely focused on what they say about capital spending when it comes to AI and data center. Remember, with Microsoft, there's been some questions. Is it slowing its spending? Is it just diverting through either CoreWeave or OpenAI? Last week, Alphabet came out and they reiterated their capital spending guidance, around $75 billion, big number. Comments out of Amazon and NVIDIA earlier last week talked about no slowdown whatsoever. So that kind of sets the stage for what we'll be seeing. But make no mistake that when the market parses these capital spending comments, Microsoft, Amazon, Meta, the stock that it's going to be connecting the dots to will be NVIDIA. And that stock is about 5.6% or so of the S&P 500. So no matter how you slice it, it is going to be a very, very big week on the earnings front for the S&P 500. And if you're thinking that those five stocks account for even more of the Nasdaq Composite, well, you would be right. So again, a big week either way. Now, a minute ago, I said that just about 75% of the basket will have reported by the end of this week. That means there's about 25%, or maybe just a little more, that has yet to report. Now, there will be another array of technology companies and others in there, but one of the bigger cohorts is going to be retailers. Remember, most of them conclude their quarter at the end of April, so in the next couple of days. And that means that they will be reporting in the next several weeks. Now, given the nature of their business, their comments about the impact of tariffs on their business, that's going to be meaningful, And setting the stage for that, we're reading that container port operators and air freight managers are reporting sharp declines in goods transported from, you guessed it, China. In particular, the Port of Los Angeles, the main route of entry points for goods from China, expects scheduled arrivals in the week starting May 4th to be a third lower compared to last year. And air freight handlers have also reported sharp falls in bookings. This tells us that we are likely to see renewed supply chain issues And that means we're going to have to watch inflation data very carefully for May and June, especially with the Fed's June policy meeting on the 18th of June. Now, why is that important, that timing? Well, that's going to come after the May CPI data. So we could very well start to see the impact of these supply chain issues in that May data. We'll have to follow the data like we always do. But it also, when we think about this, gives us a reason to think that guidance from retailers are likely to fall short of market expectations. It could be on the supply front, it could be the demand front, given what we've seen about consumers, or it could be on the margin front, given what I just talked about. So we'll have to be very careful with those. In terms of the Fed, we have no Fed speakers this week because the central bank is in the quiet period ahead of its May 6th, 7th policy meeting. That means that this week, as we get a fresh wave of economic data, the market is going to be left to its own devices. No Fed heads to kind of sprinkle little comments throughout the week. And this week, again, a big week of economic data. We're going to get the March personal income and spending data, the March PCE price index data, which, again, that tends to be one of the Fed's preferred metrics, but given the timing regarding tariffs, I would argue a little rear-facing. We're also going to get the April ISM manufacturing PMI report and, of course, the April employment report. So a lot to chew through on the domestic data front, but we're also going to get data for China. That'll be the April PMI data, as well as several PMI pieces for the Eurozone. Will it start to show the impact of tariffs? What does it mean for the speed of global growth? We'll want to parse that data to get a better and updated view on all of that. And of course, on the topic of tariffs and trade deals, we will want to keep our ear to the ground. I know folks want trade deals to happen perhaps quicker than expected. And I say that because over the weekend, Treasury Secretary Bessent offered a time frame of months to hammer out a trade deal with China. So between the market being potentially, let's say, underestimating the trade deal timetable and potentially overestimating the number of Fed rate cuts that we could see this year, I would argue, folks, continue to tread carefully. That's our outlook for the week ahead. Be sure to tune in. We've got a lot more coming your way. Thanks for watching.